All right. Hi, Thea.
Hi, Francis.
Great to share the stage with you tonight. So, Thea, you're... Sorry. Thea, great to be with you tonight. Thea, you run Change Global Investment, top-ranked, emerging markets investment fund. Your results speak for themselves. 20% 5 years annualized gross returns, 10% standard deviation. But you're not the usual PM sitting in an office, right? You'll spend a lot of time on the ground. You've traveled, what, more than 200,000 miles last year? How is that even possible? You're versatile in small and big countries in emerging markets, in Africa as well, in my backyard. I understand we're both big fans of Nigeria, right?
Yes, we are.
Why do you do all this?
Well, so Francis, great to share the stage with you. As you know, this is not a job for me. This is a passion. I get to drive alpha every single day in the most inefficient asset class. Emerging markets are growing, they're thriving, they're hugely inefficient, and there's always ways to make money. But to do that, you have to be on the ground. You have to visit and engage with corporate management like yourself. We travel with our team relentlessly, and we do that through the up and down cycles. You also know that I'm from Eastern Europe, so I represent the developing world, and it's my personal obsession to make sure, to help, to ensure that those markets fulfill their price potential over the course of my career. And Francis, back to you. Yep. You're not the typical CEO either. You left a very successful consulting career to move to Africa 15 years ago in Abidjan, Côte d'Ivoire, which is one of my favorite places to visit. You did such a phenomenal job running that country unit that you were appointed to be the CEO of Jumia about 2.5 years ago. And now, I'm not sure how you do what you do. You're on the ground, building e-commerce from the ground up, literally in places like Nigeria, Egypt, Ghana, and simultaneously, you're running this US publicly listed company.
Quite an adventure. I mean, on a personal note, it's obviously a once-in-a-lifetime opportunity to build something, a massive business from the ground up in Africa in an environment that I find extremely stimulating. Well, the business opportunity is everything to me here. I operate in e-commerce, which is kind of glorified retail, tech-enabled. If you look at Africa, those markets on the retail side are the last markets on earth that are still growing, mostly driven by demographics. And at the same time, these are also the last markets on earth that are not saturated by supply because of massive inefficiencies in local supply chains, operational issues, and so on. And now that the technological enablers are ready, e-commerce can solve those issues. With e-commerce, we can radically transform the way consumers are served across Africa and drive outsized returns along the way.
Amazing.
So that's the story, that's the mission for me. But one step back from Africa, back to emerging markets. EMs have been outperforming earlier this year, right? Is it just a trade? What's your perspective?
So emerging markets are up 20% this year. They were up 30% last year. Emerging markets are doing very well. And this is absolutely not a trade. This is the right time to be investing in emerging markets. And I've been doing this long enough to remember that emerging markets can outperform the US market. In the early 2000s, emerging markets...
It happened. Yeah.
Yes, it's possible. Emerging markets outperformed the S&P by 10% a year over the course of 10 years. And this time, we think that this cycle is going to be longer, more meaningful. And the reason for that is we'll discuss improving fundamentals across the board, supported by very attractive valuations and a very, very favorable positioning. So speaking of travel, as you said, we are everywhere, and it's true. If we travel to Asia, we see massive investment in AI and technology. In Europe, there's a resurgence in investment in infrastructure, defense spending. Latin America is benefiting from this incredible commodities boom and global supply chain realignment. And all of that is happening when the valuations are really, really low. Just as a reference, emerging markets are trading at 10 times forward PE, which is half the US valuation, with twice the earnings growth. And on the positioning point, I think the best reference would be big picture. Emerging and frontier markets account for 85% of the global population, over, well, close to half of the global economy, and they're just over 10% of global market cap. So this is the start. It's going to be a long cycle, and this is the right time to be buying. Africa.
Yes.
I spoke a lot about
a little focus on Africa. What we see on the ground, I mean, it closely matches what you're describing, right? What we see on the ground in Africa, which is more like frontier within EM, we see very positive trends happening. I will pick only two, very long-term and mid-term. In the very, very long-term, demographics, the shift is absolutely massive. Right? From 1.5 billion people today live in Africa to 2.5 billion in just 25 years from now. This is going to completely change the face, not just of the continent, but the face of the world. And if you're targeting local consumer, it's quite a game changer. Only last year in 25, to give you an idea, more babies were born in Nigeria only than across all of Europe. So for my business, it's an absolute game changer.
That's incredible.
And then more medium-term trends. I deeply believe we've entered a new cycle, macro cycle for Africa and a lot of EM markets, emerging markets, sorry. That's marked by much greater currency stability.
Yes.
Right? Most of you know that between 21, 22, up to 24 recently, a lot of emerging markets have gone through very, very tough times, especially in Africa with massive currency volatility and so on. But under pressure, local governments have taken reforms, great economic reforms, pro-business, and we have now a much better environment to operate as compliant companies in those markets. A great example is Nigeria. Nigeria was in a tough situation 3-4 years back. President Tinubu has delivered reforms and an economic agenda that nobody thought was actually possible in this country. At the same time, they completely transformed the energy sector with a new refinery built by Dangote. They've managed to stabilize their currency, and it's creating a much better, business environment for all companies. And this is something we think across Africa, across all the markets where we operate. Greater stability currency that's going to be helped by a softer US dollar, if we believe in that scenario, and it's going to be great for business.
Well, and it's already playing out, if I may add, because I'm the investor here. Emerging markets are doing well, but frontier markets are doing even better. As a reference, Nigeria, one of your biggest countries of exposure, is up over 170% over the past year.
Yeah, it's been
so
crazy.
This is already playing out, and Nigeria is still trading at less than 7 times price to earnings ratio.
An amazing catch-up in the case, yeah. So what are across all emerging markets, what are your key themes at the moment?
Yeah, so a lot of opportunities across emerging and frontier markets. I would say that there are 3 main themes that we're investing in today. 1 is capital markets, 2 is commodities, and 3, technology. In the capital markets, we're investing in local stock exchanges, brokers, asset managers. So this is clearly a play on the new bull market in the developing world. It's a play on rising liquidity as well as the opening of the IPO window. The IPO window is literally opening up for the first time in 15 years in a sustainable way. For example, last year, 4 of the top IPO markets globally were in emerging markets. And this year, as we speak, we're actually in the largest and first IPO out of Uzbekistan. So there's a lot going on in this sector. In commodities, we like the enablers of the new global supply chain, particularly in Latin America. And in technology, of course, we're invested in the big global players in foundry, TSMC, and memory, Samsung in Korea. But we're just as excited about some of the domestic, localized tech players. And here, over the years, I've been investing in Africa for 20 years now. And historically, the only way we could access those markets was through the more traditional economy, banking, telecoms, beverages, BBTs. And now we have an opportunity to invest in the new economy. We are an investor in Jumia. And I think that you're probably the best person, since you are driving the growth of e-commerce in Africa, to speak about the sector.
Yeah, well, thank you. We're happy to provide a bit more diversity in investment opportunities across Africa. I very often get the question about whether Africa was ready for e-commerce, which was the wrong way to ask. Definitely, there's been demand, and consumers have been ready for e-commerce for a long time. The enablers are in place. Now that it's easy to operate, there is friction, it's a challenging market, and so on. But you can actually operate in Africa, and you can operate e-commerce. The real challenge to build a successful e-commerce platform in Africa has always lied in actually understanding the market, the real market, and embracing it as it is. And let me explain. My core customer makes between $200 and $400 a month, and he lives in a small town. That's the reality of the lower middle class of Africa. That's where you can reach hundreds of millions of potential customers, drive volumes, and I insist, also drive profitability. Maybe sound counterintuitive, but it's actually perfectly feasible. And if you acknowledge and you accept that this is your market, not the market you're dreaming of, but the real one, then you build a value proposition accordingly. And that's how it works well in Africa and for emerging markets. In our case, what we did at Jumia, we've built an amazing value proposition heavily focused on value for money, and basic, reliable service. Mm-hmm. Nothing fancy that customers cannot pay for. In a country like Nigeria, as I like to say, reliability is luxury. You deliver basic service in a very affordable, cheap way, and I mean cheap in a favorable way, and with focus and quality of execution, being maniacal about cost management, because nobody can pay for waste in those markets. You can make it to scale and profitability. Execution is tough. You need to understand the market, but it's also a great barrier to entry in favor of local incumbents like us.
Amazing.
So we're at Sohn, we need to talk about stocks, right? What are your top picks?
Top picks. So I have 3 ideas across 3 regions. I'll leave the 4th region to you. I'm going to speak about Kiwoom Securities in Korea. I'm going to speak about YPF in Argentina and the Warsaw Stock Exchange in Poland. Starting out with Kiwoom Securities in Korea. This is the #1 retail broker in the country. And Korea is red hot. That market is up over 70% this year after being up 70% last year. This year, what's different is that the Korean retail investor is getting involved. And a part of that is repatriation of assets from the US stock market to the local Korean market because of tax incentives that the government proposed. The new catalyst going forward is the introduction of the omnibus account, which for the very first time will allow American retail investors to access the local Korean market. Stocks trading at 8 times PE, 1.5 times book value, 20% return on equity. So we think this is a terrific opportunistic idea. Moving on to Europe, I like the Warsaw Stock Exchange. This is the stock exchange in Poland. And it's also the largest stock exchange in Central and Eastern Europe. This is a play on the recovery of the European capital markets. And in Poland's case in particular, the government is focused on moving liquidity from the bank accounts to the stock market. Poland is truly an outlier. Over 50% of household assets are parked in cash deposits, and the government is intent by the end of this year to enact legislation to move that part of that liquidity into the stock market. So this is a long-term, very high-quality story. And lastly, YPF in Argentina. YPF is the national oil and gas champion. And this is really a story on the development of Vaca Muerta. Vaca Muerta is an up-and-coming, phenomenal shale resource. In fact, #4 in oil shale and #2 in gas globally. And YPF is the absolute dominant developer of the field. They have over 40% concession of acreage, and as such, they have a very strong production profile mapped out. They're to grow production by 25% a year through 2030. Now that stock is available at 3 times EV to EBITDA, which is the absolute historical rock bottom valuation. And I think it's exactly the stock that we like: low valuations, high growth profile, overlooked, under-owned, and super excited about. I know you want to go.
I'll let you finish.
Tell us about your stock pick.
Yes,
you did have a blowout quarter last
Yes.
week, so congratulations on that. And I'm just so excited that we get to share the investment case for Jumia.
Yes, so let me get started. So Jumia is the dominant e-commerce platform across Africa, and for investors, the best way to tap the rise of African consumers at scale. We're actually investable. It's a liquid stock listed at the New York Stock Exchange. There's plenty of liquidity to build or exit real positions, which is something worth mentioning for African coverage. We have already diversified. We're across 8 of the biggest markets in Africa already. We're benefiting very clearly from strong structural tailwinds. I mentioned demographics, tech enablers, and the new macro cycle. But most importantly, over 10 years of painful learning, I will say, operational learning, we've built an amazing product market fit, which is, I believe, the hardest thing to achieve in emerging markets, especially for the unique profile of our consumers. And we've built real barriers to entry. The moat is real, and it compounds with scale. It means we've built unique sourcing capabilities for fashion, beauty, electronics, consumer goods, and so on, mostly direct from China. We've built, grown, and we fully control a whole distribution network to reach smaller cities across those 8 countries. And we own the most famous and most respected e-commerce brand across the continent. And all that turns out to be extremely hard, extremely expensive, and nearly impossible to replicate for new players who want to come and eat our lunch, basically. We've been competing with the likes of Temu, and we're winning. It's very clear. It's hard to overcome those barriers that we've been building. But most importantly, as you've just mentioned, it's all starting to translate in the numbers. So we've been able to show quarter after quarter that we have a clear path towards scale and profitability, both at the same time. However, like many emerging markets, like all of our continents, our stock remains kind of misunderstood and underrated. I like to see it this way, but not for long, as the results will speak for themselves. In short, I think this is merely our Shopee 20 years ago. And right now, as an investor, you can get involved at a valuation that's below $1 billion. That's quite an opportunity. Jumia is the only listed liquid company that is already able to tap the rise of African consumers at scale. We have a very clear head start and massive upside potential ahead of us.
Well done, Francis. Merci beaucoup.
Avec plaisir.
It's been absolutely a pleasure to share the stage with you here today. Thank you so much for that. And I'm so happy we had an opportunity to showcase our enthusiasm, our on-the-ground conviction in these markets. This is the time to be investing in the emerging and frontier markets. And we're so looking forward to welcoming more allocators and more investors to join our journey.
Thank you, Thea.